Oh, debits and credits, debits and credits. I know this can be really confusing for folks, especially if you're used to seeing how we talk about debits and credits in our bank, right? The bank people, how they talk about things. You have a credit card, for example, right? You have a debit card. And so the way they talk about these things can be confusing then when we move to the bookkeeping world. But one thing to think about is that if I am buying an asset from you. To me, that purchase, I'm going to put a debit in as an asset, but you're going to put a credit in as income. So my debit is your credit. And it's very similar at the bank as well. So when they talk about having a credit to your account versus a debit to your account, it might seem kind of backwards. But actually, it's because of the relationship between you and your bank. Their credit is your debit. Their debit is your credit. And so understanding that it's looking at two different sides of the relationship that causes that confusion between debits and credits should really help you out. And the last thing with debits and credits is often most of us have some sort of a key. We really tie into some aspect. And once you have that key, everything else falls into place. If you know that deposits into your checking account is a debit, then by default, the credit side of that entry is going to be income. So we know that incomes must be credits because deposits are debits. That's one form of a key. Some people really focus on the fact that the credit cards or liability accounts, those are credits, and the expenses that you're paying for with your credit cards are debits. And once they get that in their mind, that the credit card charge is creating a credit in their liability, with that, then they can have a key that says, okay, I know liabilities are always credits, and therefore everything kind of falls into place of what's a debit and what's a credit. At the end of the day, debits and credits are just talking about a left-hand column and a right-hand column. And we could have called them George and Fred instead, but we didn't. And so we call them debits and credits. And every type of account has a normal balance. The normal balance is either a debit balance or a credit balance. And the definition of that is what's going to increase the account. If a debit's going to increase the account, then the normal balance of that account is a debit, and it's a debit account because the debits will increase the account, and the normal balance is a debit, meaning it's in the left-hand column. And then your liabilities are in the right-hand column. Their credits, that's their normal balance. So I know debits and credits can be kind of confusing, but if you can find your key, that one thing that you remember, then everything should just fall into place like dominoes.